Home values across Australia's largest capital cities have been falling since they peaked in late 2017. In fact, it looks like we're in for the biggest and longest national decline in home values for almost 40 years, since they started recording regular data in the 1980s. Consumers have lost their confidence. Firstly, home buyers went on strike. Now, in Andrew Wilson's words, home sellers are on strike as well. And while the property markets seem to be starting 2019 in a positive note, with more interest from buyers, auction clearance rates rising, the banks chasing more business, suddenly another hurdle's been put in our way: a federal election. And elections always create uncertainty, and when there's uncertainties, buyers put their hands in their pockets and they don't make decisions. So in this week's Property Insider video with Dr. Andrew Wilson, Chief Economist of myhousingmarket.com, we're going to have a chat about what the election may do to the property markets. Welcome, Andrew.
Thank you, Michael. Yes, good to see you.
So the election date's been set, Saturday the 18th of May, and now we've got school holidays in some dates and Easter as well. What's going to happen? How's this going to affect our recovering property markets?
Well, look, as you suggested, Michael, it's really an unwelcome distraction to the market as it's performing at the moment. There's no doubt that we are in a downturn. I really hate to use the word correction, because there's really nothing correcting the market at the moment except lack of confidence. And that, of course, is very difficult to shift if there's not a material aspect to the market, such as higher interest rates or higher unemployment affecting buyers and sellers. It's a mental aspect of the market, confidence. Then that is tough to turn around. And what the last thing you need is another fear factor impacting those buyer and seller decisions. And we do know that elections cause uncertainty. Uncertainty is grist to the mill for lower activity in our property markets. And, we're now just at the wrong time, probably getting the federal election, in terms of maybe just some green shoots starting to appear in our property markets. Auction clearance rates, particularly in Sydney, have improved. But, this is a very fragile environment.
Well, buyers and sellers dislike uncertainty, and while there seemed to be a level of certainty of who's going to win the election, the gap seems to have narrowed recently. More uncertainty.
Well, that's right, Michael. It seemed to be almost a done deal over the last couple of years. A lengthy period with the Labor Party ahead in the polls. It was almost, an expectation of certainty that the ALP would form the next government. But the polls have narrowed. The budget was welcomed, latest budget. No surprise, moving into surplus for the first time since 2007. And, tax cuts, giveaways, and, these are positive aspects for an economy that is crying out for some sort of stimulus, particularly consumers that have been seeing their incomes just flatlining over the last couple of years. So perhaps a budget bounce has helped to narrow the polls. I also think that, people are becoming more focused once the election campaign is called. And look, there's certainly a few negatives in terms of what the ALP are offering. But again, I think this election campaign will be won in the campaign with just a few points on the two-party preferred now at the moment between the ALP and the government. I think the campaign becomes very, very important in terms of the likely winner.
Well, it looks like one of the things that's going to polarise people is going to be property policies. And this hasn't been a big factor in previous elections, but it seems like you're either going to be in one camp or another at the moment, Andrew.
Well, look, yeah, that's right, Michael. And I guess we've got all these factors of uncertainty, really coalescing at the moment. It's a market that's looking for a bottom at the moment after a lengthy period of decline. Is the uncertainty of the election environment itself, which always, as you suggested, works its way into wariness in buyers. And, of course, a lengthy period of school holidays. We have a later Easter this year. It's tied in now with Anzac Day, and that really, as typically, sidelines the month of April in terms of focusing on big decisions.
Well, it looked like things were improving. The banks are chasing business. Buyers are starting to show some interest. There are some who are interested in getting in before the tax changes occur. And auction clearance rates have surprised on the upside, particularly in Sydney recently, Andrew.
Yes. Well, look, that's right, Michael. The rest are just sort of so. Melbourne's probably still dragging the chain a little bit, which is surprising because the Melbourne market certainly has the strongest underlying drivers, but it's a market at the moment that lacks confidence. But Sydney's moving forward, but the Sydney market's really strengthened by the inner suburban areas, higher priced areas, lower northern beaches, inner west, and the upper North Shore are leading the charge in that particular market. So, but look, these are hurdles to overcome: the election, new policies and holidays. And in a sense, the election campaign has come just at the wrong time for the property market. And it is just amplified by the fact that a significant campaigning element will be a scare campaign or scare tactics over the proposed change to negative gearing from the ALP. So it really is going to be, maybe it's a good thing in a way that this is a distracted month anyway, being April, but it won't help the market, that's for sure.
While it'll actually be a distraction for the property markets, for those people who've got a long-term perspective, it's actually an opportunity. You and I have been around long enough. We know governments come and go, prime ministers come and go, tax policies come and go. Downturns are temporary, while the long-term increase in value of well-located capital city properties is permanent. So if you can see past all that, and if you can make a decision, Andrew, isn't this a great time? If you're going to buy a house and upgrade anyway, if you were going to buy an investment property, there's less competition. Wouldn't this be a good time to get in?
Absolutely, Michael. And you've hit the nail on the head there. It's, these factors are short-term impediments to the market. These are not significant. Even the changes to tax policy for negative gearing, if the ALP gets in, I don't believe it'll have anywhere near the impact that's being promoted in the current scare campaigns, because the market dynamic has significantly changed since it was introduced. But these are only short-term impediments, in my view. And really, I guess savvy buyers, as you suggested, can take advantage of that, I guess, hesitancy at the moment in the market from buyers and sellers, if they can find the right property, to get into the market right at the time when everybody else is sitting back, knowing that the market, given the fundamentals, are clearly still strong. Confidence is always a short-term driver of markets, Michael, either high or low. And at the moment, we're in a trough of confidence, a confidence trough. But as I said, it'll pull through. But, good time to be thinking, I guess, beyond the fear factor and take advantage of it.
Well, you say confidence is the driver of the market, and I fully agree. But if you look at it, it always overshoots on the upside and the downside. So while homeowners drive our markets, it's particularly investor confidence that creates the boom, and investors now who've stepped out to a degree, of course homeowners have a bit as well, they actually slump. So people tend to be most confident when they probably should be the least confident, near the top, and they're the least confident when they probably should be most positive, like right now. But I remember many years ago reading that King Solomon had on his ring something inscribed saying, "This too shall pass," to make sure that he wasn't overconfident in the good times or too pessimistic in the bad times. So I think over the next couple of weeks, we're going to have some really interesting discussions, because as the campaign keeps running, more things will come up. One of the interesting things that came up recently was that some of Labor's basic assumptions were wrong. They assumed that only 7% or so of investors bought new properties, and they were brought to task with that, when in fact the figures are much different to that. A huge percentage of investors buy new and off the plan and house and land packages, so they're going to have to relook at what they're going to get out of their proposed policies.
And I think it'll be even lower, Michael, because we have had the investors have left the building because of those questionable policies from APRA, designed to, reduce investors. Well, they've done that, but they've also pushed the market not off a cliff, but certainly down a very steep hill. And, this is the point of looking at the cycle as though it's some sort of a fixed model, that it's going to repeat what it's done before. But it's never like that. The factors of a strong financial sector, which we do have in terms of risk-free or risk-averse borrowing, as well as strong aspiration for housing, and constraints to supply really generally mean that, we'll always have more demand than supply in our housing markets over the medium to longer term. But, no surprise these assumptions have proven to be wrong, in the sense that, they're looking back at previous cyclical outcomes, which are all different, moving forward now. Politicians more and more, in my opinion, are playing to the mob. It's about, coming up with a, immediate savvy type of policy that will get some traction, even if the real logic to it leaves a lot to be, or is very questionable, which I think, a lot of our property policy decisions have been, not just from the ALP, but the policy that was introduced, which we forgotten a couple of years ago, when we were in the middle of a very strong boom, rather than letting the market find its feet as it always would have. Governments interfered, not just APRA, but we reduced Chinese borrowers and Chinese developers. That's having a significant impact on our markets at the moment. If we leave well enough alone, then we wouldn't make these mistakes and, perpetuate downturns and, restrict the market from, finding its natural fall. But the other thing you were saying about confidence, Michael, is spot on about King Solomon, but Keane said it all in regard to animal spirits. And animal spirits are not just about, the what you can't track in terms of, speculation, but it's also the reverse in terms of fear. So fear and speculation are all part of the animal spirit environment, which either drives the market too high or too low. And I think we're seeing it too low at the moment, Michael, clearly.
Sure. Well, lots of news coming up over the next month. Yes. Before the elections. So we're going to be having these regular Property Insider chats, discussing the back stories behind it. Look forward to catching up with you next week, Andrew.
Yes, thank you, Michael. And don't eat too many Easter eggs.